Hey, what's good? Matthew Manuel here, and in this video, we're going to be going over one of the most critical mistakes that traders should avoid. And not only will we be going over the mistake, but I will also be showing you a simple tool that you can use to help you avoid this mistake. But real quick, before we get into the video, if you're new here and haven't already, please be sure to subscribe and hit the bell notification icon so that you don't miss any future content. And also keep in mind, if you find yourself enjoying this video and want to support the channel, hey, be sure to smash the like button. And without further ado, let's get into the video. I'm not here to waste your time, so let's get right into it. The most common mistake that I see traders making that is losing them thousands of dollars, and I've done this myself, is they are entering a trade without a plan. Of course, you can still profit entering a trade without a plan, but you can also lose a lot of money by not having a stop loss, not having a plan. The exit is really probably one of the most important parts of the trade, because you can go up from being 200% on a trade to being down 50. So with that being said, let's hop in TradingView and take a look at a tool that is going to help you to make your plans when you're trading. So for those of you that are unfamiliar, this is the TradingView platform. This platform is amazing for technical analysis and charting your trades and all that. We are currently looking at the SPY. Let me clear off my chart real quick. Okay, and now that we got that all cleared off, the tool that we are going to be looking at is this tool right here. There's actually two. There's a short position and a long position. And this tool is going to be very helpful when it comes to entering a trade when you don't have a plan. So we're just going to look at this chart and be kind of hypothetical. We're going to look at the SPY where it currently is and draw a potential plan. All right, so looking at this here, let me see. So right here we have the 30 EMA, and we've noticed that whenever it comes to the 30 EMA, which is this blue line, so that, since I didn't clarify, it kind of meets a little resistance. It'll go past a little bit, but it'll bounce off. All right, say we would expect this next time it'll either break through or continue higher to the upside. All right, I'm going to show you the scenario for both real quick. If you think it's going to break through the upside, you want to get the long position. So basically, say you want to enter right there where the line is, and you want to set your target. Maybe you want to set your target up here because that is the last high. Maybe you want to set it higher, but let's just put it right there for the short term. And you want to have it a little bit below the line, just in case, because that's about how much it's been pulling off the line. So right there, you can see your risk to reward ratio is 3.9. So basically the way you would trade this is you will enter right here, and right here, this is where you would shoot for your profit. And if it falls below this, you would be stopped out. Now, the cool thing about TradingView is if you have a brokerage account with one of the brokerages that they use, you can actually set it up to automatically do that. I'm going to let you know I don't do that, but you can set alerts for all these points, which is nice. So yeah, just having that plan right there already protects you from that critical mistake of not having a plan. Because if you step right here and lose out, if you miss out on this right here, sure, you'll be down. Sure, you'll be down in your trade. But that's a lot better than it completely reversing and coming all the way back down to the 200 because of the fact that you don't have a plan and you just thought it would go up. All right, so yeah, that is the long position tool. Now to show you the other side, we can look at the short position. Say we wanted to play the break of this line, and say we think it's going to end up at least going to the 200 moving average. We will draw that there, and say we wanted to set our stop loss at the last previous high. So right there, you have a 4.25 risk reward ratio, which is really not a bad risk to reward ratio. Benefit to this, again, you're avoiding that critical mistake of not having a plan. And yeah, you set your stop loss up here, and you can potentially write it down to here and have your take profit set right there. So yeah, really it's as simple as that. They say knowing is half the battle, and knowing what your plan is going to set you up for that much of a better exit. Whether it be with a small loss or a massive win, doing this will help you to avoid that critical mistake. If you have any questions or comments, be sure to leave those down below in the comments. If for some reason you made this far and haven't already, please be sure to subscribe and hit the bell notification icon so that you don't miss any future content. And if you enjoy the video or learn anything, be sure to smash the like button. And last but certainly not least, thank you so much for watching, and peace.